all things to do with the modern market, that is the crypto market, the NFT market, and how to make some or a lot of money on the internet. Loaded up for discussion today, we have high inflation data sending markets lower as the crypto market has leverage wiped out. We've got the US Treasury Secretary Scott Bessent saying the US will seize Bitcoin, but will not buy. But then kind of said that they're still exploring how to buy. So kind of mixed messaging still there. And we've got Hyperliquid in big news, reaching new all-time highs with $29 billion in 24-hour volume and 7.7 billion fees in 24 hours. We'll place those numbers in context in just a little bit. And as usual, we've got the latest on price action on crypto and NFTs, plus a discussion on where we think attention is flowing. As usual, not as usual, today I have no co-host up with me on screen, but I have my trusty co-speakers with me on stage. We've got Funky and Oxy. So maybe we're going to be leaning on you guys a little bit more today, as Legendary and Bread could not make it. Maybe Bread will be with us in a little bit, but we've got a lot of stuff to get through. So we're going to get into it in just a moment. Checking in with Funky and Oxy first. If you are there, if you are ready to pull the trigger if needed. Funky, you've come off mute. How you doing, my man?
I'm always here, bro. Happy Friday. It's Funky Friday. You should have asked me. I would have been on cam with you. I could have rocked the gold chain and the hat. I mean, but always happy to be here and love the show. So looking forward today. And, I'm not too worried about the market. It's so funny how people just insta panic. Like, I don't get it. I mean, the way that people react, like the cycle's over. It's like we have infinite institutional bid. Just chill out. It'll be okay.
Yeah, it was one of the biggest reactions yesterday. I was out at a meeting after the show, and then I checked the price action. I was like, what is going on? Like, why is there so much leverage? I think everyone's on Hyperliquid, and I guess we can kind of connect these two things together, right? Because the first headline is high inflation, like, there's a lot of leverage in the system, it's all getting wiped out. And then the final headline is, okay, Hyperliquid is absolutely printing. It's one of the only main tokens that's up on the day because everyone is losing their money on Hyperliquid. So, I mean, we've spoken about the market share that it's taking a little bit from centralized exchanges, is taking a hell of a lot of the on-chain revenue already. And look, I think in the grand scheme of things, it's still far away from truly like moving markets because a lot of the volume, the main volume is on centralized exchanges. But gosh, it's making a lot of money at the moment. So, yeah, I couldn't agree with you more, Funky. Funky Friday has a great ring to it too. So, we've got to do something with that really formally. Oxy, welcome to the stage, my man. How are you doing? How are things your side?
Yeah.
What's going on?
Good, man. Same deal. Comfy in spot and comfy in my liminal position,
Okay.
I basically everyone's trading on leverage, so you got to earn those fees off the lending. So no, I know it's funny. Everyone's freaking out, starting drama on the timeline, everything. I'm like, dude, basically all-time highs. It's like, I'm chilling, man. It's all good.
Yeah, I think maybe people get so zoomed in and they're getting pretty stressed out, I guess. But realistically, Bitcoin's at 119,000, Hyperliquid's at 49, ETH's back to, it hasn't, I wouldn't say it's caught up yet. It's still beneath all-time highs, but we should be in a good position, guys. Like, you can still debate whether things are going to go higher or go lower, but you should be in a pretty healthy position here. And if you're not, I wonder whether, I don't know, I'll just check your risk parameters, because either there's a lot of leverage creeping in or you maybe have oversized too late. I think that's something that people do in general as well. Ideally, you size up at the beginning, you get confirmation, you go higher, and then you can kind of start taking chips off the table, rather than what I think some people do is chase later, kind of FOMO in with size, because they start to get more confident as the price goes up. But then that's not really how it works, is it? That's not how you make. I mean, maybe you can make big money going into ETH at 4.6K with a lot of size, because maybe we still go higher, but it's clearly not as good as if you did that a bit lower. But that's the fundamentals of trying to buy high. Sorry, buy low. That's the way around we need to go. Buy low and sell high, guys. That's the general plan. Oxy, wanted to follow up one thing with you before we get into the main headlines today. You mentioned Liminal. You wrote a really awesome article very recently on how Liminal works, why you think it is interesting, why you think it is a good opportunity. Just wanted to give you the chance to maybe speak to that article and explain why you think that's a good opportunity. We've been speaking about it a lot as well. We're like heavily exposed to the Liminal protocol built on top of Hyperliquid. But do you want to just speak to the listeners and explain why you think that's interesting?
Do I still have you? I think I may have lost you there for a second.
Oh, can you hear me now? Can you hear me now, Oxy?
I hear you both for what it's worth.
Okay. All right. So you guys can hear me. Apologies. Yeah. So yeah, Liminal. I mean, I think it's an excellent protocol. So essentially, what you're doing is you're earning fees through a delta neutral fashion by playing both sides of the perps market. So if you're in spot, you're essentially longing a token, and if you're short, you're lending your funds to the long people who are long. So you're playing both sides of the market, but since the market's been so bullish and basically people are perpetually long on Hyperliquid, you can earn a lot of really good money and fees without exposing yourself too drastically to the downside. So right now, as B-Check said in the start of the show, Hyperliquid's absolutely printing on money. Everyone's in perps, everyone's leveraged up. So right now, depending on the token, you can earn 10 to 20% just by playing both sides of the table, if you will. So I can obviously go in much deeper than that, but I think it's a really good play. There's a certain point, I think, in the market where people might start being like, okay, it's getting a little toppy, and then leverage ratios might start flipping short, and more people will be short. And then in that situation, I'll probably be moving away from Liminal a little bit, or at least playing it a little differently. But as of right now, everyone's max long, and you can print on the fees. So
exactly. Really nice explanation. Appreciate that. It's the same concept with Athena, right? Athena as a stable, it's inverted commas stablecoin and synthetic dollar, but the yield comes from the basis trade, which is putting on all the time, because crypto is such a unique environment where some people are always long, so that you just get to capture the basis. And the cool thing about Liminal is that you can go in just with dollars. So that's like one kind of specific point that's helpful to you. You deposit in dollars and you can earn that yield in dollars as well, whilst the protocol does it itself. And ordinarily you would need to put that trade on yourself. I've never done the basis trade by myself, just kind of can't be bothered to do it because you kind of need to put on both sides of the trade. Whereas this protocol specifically makes it really, really easy to capture it. You choose your asset, you choose Bitcoin, or you choose Hype, or you choose Fartcoin, or you choose Sol, and you can there's a little slider and you can choose the proportions as well. So it makes it really, really easy to do. That's why I like the product, because it's net new. That was not done before. No one has done that before in crypto, as far as I know. Maybe there was like one team, someone maybe mentioned to me, but no one. I like seeing new products being built, capturing new, kind of creating new value. And I think they've gone past, I should have the number correct. It was either 100 mil or $1 billion. It was pushing towards $1 billion in deposits. I should definitely know which number that is because it's a big difference, but pretty positive on that protocol, doing good stuff on Hyperliquid. And we're going to come back to Hyperliquid in just a little bit, obviously, because they are printing money. We're going to put those fees into context. But in the meantime, let's get you up to speed with everything that you need to know that is going on in the market. Starting with the majors, we have Bitcoin down 1.5% to 119K. You got ETH down 1.5% to 4.6. Just going to click into ETH here and see where we went yesterday. Okay, so this is why the market is just deranged at the moment, or maybe the market is not deranged. The market is always correct. The participants are slightly deranged. We were as high as 4.7 yesterday, and then we dumped down $200 on a liquidation to 4.5. Then we bounced back up to almost 4.7. Then we worked our way all the way back down to 4.4 something, and now we're back at 4.6. Like, this is just, I'm pretty sure this is just significant leverage in the ecosystem and people just constantly pressing the buttons. Makes me kind of concerned a little bit, but at least that explains the kind of price action, or the exceptionally volatile price action we see there. Funky, do you want to come in there for a second?
Yeah, did you guys see the actual? I can't remember who posted it, but there was a great pic that showed the wick on ETH. It actually dumped all the way to probably 42, 4,300, but the wick just was insane how quickly it was eaten up. So I think it just shows the demand for the actual ETH. Like the order books must have been pretty heavy, like ready for the dip for people who want to buy a spot and pick it up and add. You know, we see all the institutional inflows, right? But yeah, it was. I wish I could remember who actually I saw the tweet. It was a great picture because the wick was insane. It went pretty low, but it.
Yeah, as you said, like just bouncing around really aggressively. So a lot of leverage in the ecosystem. We'll speak about it a bit more in a moment. Both of the headlines, or two of the three headlines, are related to it. Keeping it going, we've got XRP down a few percent to $3.10. We've got BNB down a percent to 846. Sol is down almost 4% to 195. Cardano down 2%. Doge down 3%. Tron down 2%. Then you get to Hyperliquid, up almost 4% to almost all-time highs, $48.50. The only protocol absolutely printing. It makes me think. All right, I'll say this part to the Hyperliquid part, because got some interesting questions there for us to kind of think forward. Hyperliquid is up 4% to 48, whereas Sui, it's tracking the other majors, down 3% to $3.80. On the meme coin side of things, we've got Doge. It's a red day. Everything's red, single digits at least in terms of percentage. No specific call out here. Everything is red, down, I don't know, 5, 6, 7%, something like that. Apart from Useless Coin, which is up again another 13% to back to 320 mil. I find this is also quite a counter coin. It does whatever the market is not doing, it will do. So when the market comes back, Useless will sell off. That's what I'm noticing, I think.
How is the Bonk ecosystem broadly, though?
Yeah, I think it's kind of
like,
counter,
have you tracked it recently? I remember, like, it all swung back to Pump Fun for a while there, but I don't remember if it's. Let me see the Memecoin Wars.
We say the Memecoin Wars. You tracking the data?
Yeah, there's a dashboard called the Memecoin Wars, which is like the canonical thing for all this stuff. Yeah, the Bonk is now back to like.
Should we spin it up? Do you want to share your screen, or do you want to send it to me?
Yeah, I'll send it over to you real quick. Yeah, like it's back to pre Bonk hype times, we'll say. Percentages for and someone's running it right now, so we can get good numbers, but Pump Fun is back up to almost 80%. Yeah, you can see it's crazy.
So this was basically what we're looking at here in this chart for the people who are watching it, but also those listening. Orange is Bonk kind of resurging, right? Eating into the green of Pump Fun's market share. Is that correct, Brad?
That is correct. So the orange is Bonk.
Yes.
Green is Pump Fun, obviously. And then you have a smattering of other ones. Bags is the other one that people have been talking about recently, which is created by Finn, who is someone who is affiliated with the Gods back in the day, and Frank. But it's whatever.
So basically, there was a 1 month period. 1 month period from the 3rd of July until August, literally almost exactly 1 month, where Bonk really, really ate into Pump, and now back to business as usual. Let's see where
the thing that's most interesting about it, or interesting to me, is that like the original thesis around Bonk doing its thing was that the like Radium people and the Bonk people were like, oh, it's organic. The people that are creating the coins, we pull them over to our thing. Like whether it was through incentives or through like whatever, they were like, we brought them over, and now all the coins are starting on our Launchpad. And that therefore, like, this is just where the home of all these things are going to be. Because if you look at like the other numbers, like it didn't increase in overall numbers. Like there wasn't more launches. It's just the launches were just taking place on Bonk. So what happened to pull them back over to Pump? it may have just been like some more conversations. Like, look, we'll give you some pump token, we'll give you some whatever. I don't likely think these guys are doing it for funsies or out of the goodness of their heart. There are probably some back end conversations going on that's pulling these people to and fro.
Yeah, I think someone asked me the question in the Telegram, like, what do I think about some particular coin, whether it was a pump fun one or whether it was a Bonk one. I feel like the data is not high integrity data, in the sense that, you know, someone might say X coin is the most traded at this kind of volume. The volume stuff is not real, guys, in my opinion. The half of the volume stuff is not real. I think people are kind of playing around with the volume. There's people playing games, I think. I don't know on which particular coin, but I think that certainly was happening in, you know, the first time round, November, December, January, and I think it's probably continuing. So
yeah, and this honestly makes me, because like I know whenever I started seeing this bonk stuff, I tried to make the smart play of like, or the picks and shovels play of buying Radium, because Radium was the thing that was getting migrated to, which means like if they're actually getting volume, they're getting fees, and if they're getting fees, they're doing their buyback, all that stuff. Now they're like outside the top 20 or just at 20 for revenue or fees over the last 7 days. And if that chart is not what I want to see, so I'm actually going to dump my Radium bags presently, because it looks like the actual chart for Radium has not caught up to what is going on there. So I'm going to get out of that position post haste.
Interesting. Yeah, good to make that connection to Radium. Maybe some people are not familiar with that. Okay, that is what's going on the coins and the price action. Let's get into the headlines themselves. I will share my screen again so you can see what is going on. As mentioned, we're going to get into these specific headlines in a bit. High inflation data sent the market lower. I'm going to do a very brief explainer of what is going on there. It's not super complicated, but a lot of people lost out if they were on leverage yesterday, got wiped a little bit. US Treasury Secretary Scott Bessent says the US will seize Bitcoin, but will not buy. I think maybe someone tapped him on the shoulder and told him to put a tweet out to clarify. And he said, yeah, but we are exploring ways to buy in a budget neutral way, which is something that they've continued to say. Hyperliquid has reached new all-time highs with $29 billion in 24-hour volume and $7.7 million in 24-hour fees. Huge, absolutely huge. I definitely want to have a nice segment on that towards the end of today's show. Brad will maybe take us through some of the numbers and data, and we want to reflect on that for real. Notable sales, we had this EtherRock selling for 135 ETH, which is $600 something thousand. It's a great rock, Brad, don't you think? The way that the light shimmers off the...
Everyone needs a good rock in their life.
The grayness of
when
the rock.
Times are down, someone you can talk to, someone that can really keep you going, listen to you.
I think it's the way the light shines off it, personally, and the way the artist captured that.
Yeah, well, of course. Yeah.
But you're thinking more as a companion.
Yeah, pet rock.
Pet rock.
Yeah.
Pet rock, like it. Okay, well, that's a very expensive digital asset to have. You also have CryptoPunk selling very, very healthily. Tyler Hobbs Fidenza sold for 41 ETH, so big sales across the board. Getting into the rest of the roundup, David Bailey's Nakamoto officially completes the merger and can now buy over $740 million of Bitcoin. That's, I think, one of the more prominent Bitcoin treasury companies. Remember, David Bailey is the CEO of Bitcoin Magazine. So I think that is one people are kind of more bullish on, rather than, you know, all the different types of treasury companies that are getting spun up in general. ETH Validator exit queue. Curious for your thought here, Brad. ETH Validator exit queue has jumped up sharply with 699,000 ETH, which is around $3.2 billion, waiting for the exit. Do you think some people like the ETH price here and want to sell? Is there any other reason for this? How long does this queue last? What do people need to know here, do you think?
Yeah. Turns out people don't want to just validate the expensive chain because it's expensive. It doesn't, like, you want money, and when your thing is worth money, you want money.
Is that definitely what's happening here?
Of course,
in
it's
your
what's
opinion?
happening here. Yeah. Take this same snapshot and put it on Kaido, and it's me. I'm in a 7-day waiting period to get out of Kaido so I can sell this shit. It's like, I'm not doing it because I want to, like, I don't know, like, just in case. I want to fucking sell this stuff. I would argue that is very likely to be the case here. People want to be one click away from the door.
So whether they literally want to exit right now or not, it's obviously better to get out of the queue, so that you've got that optionality. Like whether you want to sell on the day or whether you just want to hold it and then monitor price action for a few days. And that's always the case, right? Whenever you know there's a queue for something and you might want to sell, you ideally don't go to the queue that's a 7-day queue on the day that you need it, because then you've got to wait 7 days. You want it before, you want to be holding it. You want to be in control entirely of your assets. So that's a lot of sell pressure.
I will say it. Yeah, I mean, potentially when you got Tom Lee on the other side, it's not horrible. I would say like there's two elements of this that I think are kind of interesting. Like we were expecting to see a lot of this rejiggering several months ago in the last upgrade, because they've changed it. Everyone knows like 32 ETH is the thing that you have to be an ETH or Ethereum validator, but they actually changed that cap to 1028. So you could have 1,028 ETH in a single validator. So you don't need, to hold 10 validators. You can just combine into a single thing to do it. So we were expecting to see a lot more action to actually consolidate things and make the system more efficient and save some bandwidth and shit like that. We didn't actually see a whole lot of it. I have a dashboard that actually shows the progress of it. I think most people didn't give a shit. So there's a little bit of that. And like, there is a reason for the 7-day cooldown, because like, obviously these are all people validating the actual chain. Whereas like on my Kaido stuff, the 7-day cooldown thing is literally just there to like, right? There's no, like the coin's not doing anything. Right.
Yeah.
So like, that should be noted.
Okay. Good additional context there. Good to bring that up. Just so you know, Mindless, I was trying to bring you up there, but I think your connection might be being a bit weak. Couldn't get you up on stage. Try again, and we'll try and get you up. Getting to the rest of the roundup, some interesting other bits of news. Denari announces a new chain built for US equities powered by Avalanche. So there are more L1s coming with more specific use cases, not stablecoins this time, for US equities, not for consumers, for US equities specifically. Okay. There's going to be chains for everything, I guess. And maybe the branding is actually more important than the performance, because loads of the performance is going to get sufficiently good soon. Citigroup considers custody and payment services for stablecoins. Estonian bankers lost Ethereum wallet, now holds over $1 billion in ETH. I thought that was a sad / funny, tragic comedy style story. That would be terrible. Apparently the guy's considering, I don't know, just like the most, he's basically looking for help. Like, can anyone help me recover this thing, as you would expect?
Of course, it's the Bitcoin trash, like graveyard, dump yard story, right? You ever hear that?
Yeah. The guy's still looking, I think, right?
Yeah.
This was an interesting raise as well. USD.ai announces a $13.4 million Series A led by Framework to build USDAI, the dollar that scales AI infrastructure. Brad, tell me what that means.
Doesn't mean that fucking thing. It doesn't mean that's blockchain iced tea. That's what that is.
What that means is we get to raise at a really high valuation because we're going to scale AI with dollars. AI equals 13.4 million Series A. That's I didn't know you could brand dollars, Brad. That I know the chain's got to be branded. Like, okay, we are the chain for stablecoins. We are the chain for equities. I didn't know you could say we are the dollars for groceries. We are the dollars for AI.
You're not dreaming big enough is your problem.
It's giving me ideas. What could we do? We can create some dollars for something specific. I think let's think on that. That's a new business opportunity. In final news, before we get into the bigger discussion today, we've got Yeet announcing 40% of the Yeet airdrop is going to the community. That's huge. Like, obviously, we've been pretty transparent. We're very bullish on Yeet as a casino. We're very bullish on its airdrop. We think it's going to be valuable. Hopefully it is. That's just the bet that we're making. We did our first giveaway with Yeet this week, and we'll do it again next week. For the people who are using our ref code, you're obviously going to be entered into that giveaway. I think all of the leaderboard gets reset at the end of this week. So next week we'll start a new week. We will, people will do the activity that they're going to do, and then whoever's doing activity from next week will be entered into the giveaway. And we'll do the giveaway at the end of the week, so people have time during the week to kind of just participate. But I think that's pretty significant news. Phantom announces $5 billion in trading volume after integrating Hyperliquid perps into their app. That's turned into a very big money spinner for Phantom, and unsurprisingly, probably contributing to Hyperliquid's revenue too. And then a couple of more kind of Hyperliquid news. Unit approaches $1 billion in TVL and crossed $15 billion of trading volume. Obviously, Unit is the entity that has brought Bitcoins, Solana, ETH, Fartcoin, which other ones? Those kind of very, very popular spot listings to Hyperliquid. And they have also announced or suggested that Athena's token is coming over to Hyperliquid for trading very soon. And
equities generally, right?
Yes. Yeah. I mean, equities is coming as well at some point in time. I suspect that's a bigger lift than, now they're in the routine process of bringing these just crypto assets over. There's going to be a bigger regulatory lift, I think, to do stocks and stuff, but that is the plan for sure for Unit. So the sky's the limit there for them. Really very bullish on that side of things. And then a final reminder: Infinex announced their season 1 airdrop. It's live. It's claimable now. I haven't done that yet, but a reminder that you should if you scored on the leaderboard. That is the roundup, Bread. We're going to get into the headlines in a moment. Is there anything that is catching your attention before we get into the main stuff today?
I wish there was more information on this Phantom integration. I cannot there's no good dashboards that are tracking it. There's no we assumed, or I assumed, and maybe it doesn't matter because none of it's actionable. We can't buy Phantom stock. There's no coin. So a lot of it is needless. But I wish there was a way for me to actually track that stuff. I have one dashboard that I was able to find that's talking about the referrals of the Phantom sign up, which ballooned obviously at the beginning of July since it went live. And it's talking about the volume of the referrals specifically, which is just over 6 billion. So it tracks a good portion of what they just reported. But I want the actual numbers because I think that's going to be killer. The perpifying everything. Perps are just going to be such a big thing, and they're the vehicle that I think a lot of this next wave of traders are going to get really familiar with. Because I mean, they're a better form of basically options, which we know are very popular for Wall Street bets and a lot of the 2021 period. So yeah, I wish I had more information on it. I can't actually find some, so I'm going to kind of go on some soul searching and see if I can locate a good dashboard to see what that's doing.
I like that, in your soul.
It dovetails into the Hyperliquid stuff because they're crushing. We can talk about that when the headline comes around.
Yeah, I like that within your soul there's just perps like that. I'm gonna look inside. What am I gonna find? Perps.
I honestly I made the a tweet on this. I don't know, it was earlier this week, last week, whatever. It's just I'm noticing a trend that people don't want to own shit anymore. It's pump fun.
Well, this was interesting. Explain your idea.
Yeah, it's just that we're making things the act of trading. People just want to be right on the trade and make money, but they don't actually care about the underlying, right? It's like no one wants to own anything. Pump Fun as a token was launching. No one wanted to own the pump chart. They just wanted to speculate on how it was going to perform out the gate. Oh, it's at 4 billion. I want to speculate that it's going to go higher. I want to speculate that it's going to go lower. I don't want to be the one creating a bunch of content. I just want to speculate on who can create content and command the attention and do noise. Noise is the perps platform for, attention and whatever, trends. It's I'm continuously in my mind seeing a lot of these people, and it's just trading as a game, right? You want to be able to see a chart and trade, and I want to know where these numbers are going better than anyone else, and get my money out of it, whether it's Sol, whether it's dollars, whether it's Ethereum, whether it's Hype, whatever. And it's just we're all playing these games to just to get very few things. There's very few things that people actually want to own, but we play with everything and we don't want to own anything. So it's just we're perpifying the world. I think the world will be perpified, or everything will just be a long short situation. yields. We don't want to like actually like own the thing that generates the yield. We want to speculate on what the yield is doing, going up or down, and whether or not we can like magnify that to like get back to like another asset. I guess we're just always playing these games to try to own something else and not like the thing that we're doing. And perps are going to be the vehicle for this, for basically everything.
Maybe I want to link this to, it's going to be a tough link potentially, but it's kind of speaking to this other stuff that I've been reading a lot about, or just this general idea that it's not unique in any way, but I've just been reading more and more about it, kind of going into a bit of a doom spiral, to be honest, being kind of pessimistic about the way things are moving. But I found this tweet from Nick Carter quite interesting yesterday. And again, it's not revolutionary. It's an idea that's being shared a lot in general. But it says this: everyone I know believes we have a few years max until the value of labor totally collapses and capital accretes to owners on a runway loop. Basically Marx's worst nightmare or fantasy. The idea being that the means of production is like entirely owned by a few people and everyone else is entirely excluded from participating in the gains of the means of production. And therefore, he goes on to say, you're kind of relegated to, this is the permanent underclass thing. And he says, and everyone I know subscribes to the idea as if that is the trajectory for the world at the moment. And it just leans into this idea, there's that famous phrase, was it the ECB or someone telling some kind of statement that, you will own nothing and you will be happy. I just wonder whether there's something connecting these two things, like this hyper desire to gamble and not wanting to own the thing, but maybe that's because you can't afford to own anything either, and therefore it's like, what's the point in owning it when ownership is not meaningful to you? What do you think of this link?
No, I would say they are intrinsically linked. Like it's the everything's gambled is the hyper gambling thing is hand in hand with this, because it's just, yes, owning will eventually be a privilege, and it's because owning thing, yes, it will generate the yield, it will do the stuff, it'll like have a lot of this value for you, but like that will only work for a subset of the world, right? The upper class, and everyone else will have to hyper gamble their way to chase higher yields to be able to get into an upper echelon of the world. So it's like with the proliferation of AI and everyone like this consolidation of wealth to a few people, because they can leverage not humans to get what they want and to do what they want and to build these incredible things. That means the other people who are not building or not like part of these high achievers are left wanting, and with what little that they have, whether it's fucking UBI or whatever, they're spending that money to try to like get out of the trenches basically. And you can only do that through hyper gambling and trying to hit that 100,000, 10,000x. So yeah, I would say they are linked, and perps will be the vehicle for that, because it's an understandable, intuitive vehicle.
Interesting.
So
yeah, I think that there's definite link here. I've got one more thing to say on it, which I've just forgotten, but I'm going to come back to it. And in the meantime, Funky, your hand is raised. Curious for your thought on that.
I believe it was the World Economic Forum that had the famous you'll own nothing and be happy. But more importantly, I mean, Brett said a lot of what I was going to share. And I think there might be, at least for a period of time, whether that's a decade, 2 decades, whatever, I think the people who will be the middle ground will be, as crazy as it sounds, content creators and people who know how to use AI, right? Like there's already, you can see a world in which the people who get left behind are the ones who are not already learning how to use AI and leverage that for maximum productivity and benefit. So I think that there will probably be still a working class, but as this widening gulf, as you know, we do realize, because of that loss of productivity, AI, robots, you name it. I think the people who are taking advantage now, learning all the tools and everything else like that, they're still going to be high productivity. They'll be in demand. I think that'll probably be the middle ground. But then eventually, I can't see a world in which it doesn't all collapse to zero and then to UBI and everything else. It's kind of frightening. I'm glad to be 50. Let's put it that
way. Yeah, it is interesting. I saw one other very interesting thing. We're going to get to the actual headlines first, but the reason why I think this is important is because it genuinely formed a part of my thinking, I don't know, 4 years ago when I left my job as a lawyer, to try to get into the two verticals which I think are future proof. One, crypto is the future in some way, and it's just up and to the right forever, save for some volatility. It's clearly a brilliant technology which is going to get integrated. And then secondarily, content is so good. Content protects you from all of this stuff, because as people have more free time, they will have more time to consume. And attention, the currency of attention, is just, I think, fantastic for to be earning in attention. Is one of the best currencies to be earning in. A lot of the other currencies are going to zero, but the value of attention is going up. And there'll be, the reason why is because it's going to be a supply demand issue, where there's going to be an increasing demand for attention because people are going to be needed less. And I saw this very, very interesting article, because I hadn't really placed this in context. I've always had this feeling that people are working less. I know there's like high performers who are working excessively hard, but if you have a traditional job, maybe at a high performing law firm, you're working flat out and maybe on weekends, etc., etc. But when I've seen some of my other colleagues or friends working, it's not, even a 9 to 5, placing that in a historical context compared to when people might have been on a factory line like for 12 hours a day, 6 days a week, we're trending down on the longer time frame of how much work that people need to do on a daily basis. And so I think it's actually just an extension of a trend that's already existed. And maybe that's what I didn't appreciate so much. The trend is already there. We're already trending down. And so moving to a 4-day week at some point, because people don't have enough work to fill the full 5 days anyway. If you are working that kind of traditional 9 to 5, just means that I think this side of things becomes, or figuring out a way or an alternative way, either by learning the tools so you become one of the people that's more skilled, or creating some of your own equity so that you can be participating in value creation, because your equity can go up and you can build something bigger. I would just highly recommend people, if you haven't already, just to be thinking along those lines in some way, because I don't know, I think there's challenging times ahead. And I don't want to be like too doomer and stuff, but I just think it's definitely something that's come up in my mind. So wanted to share some thoughts there before we get into the main stuff. We've got 2 hands here, but I know I want to get into the headlines. So I'm going to do Mindless now. Oxy, hopefully we can circle back to you in a bit, because we want to get to the main stuff too. Mindless, we got you up on stage now, my man. How are you doing? What did you want to contribute here?
Hey, good morning. Good to see you all. Hopefully I'm audible.
Yes, you are.
Thank you. I came up initially just on the topic a little while earlier related to volumes. I'll always bang on about this, but I think it's important to note that any chain at this point that's low gas and no gas, it's highly likely that the volumes are fake, like they're botted. So I think as a metric, you're setting yourself up for failure if you're looking at that. 12 months ago, I did work with a bunch of platforms and Web3 protocols and teams, and like they were all botting their own volumes. The going rate last year for $5 million a day on Solana was about $1,500 being paid to a few market makers. 50K deposit, $1,500 a day, and you can get $5 million of daily traded volume. So I think why even look at volume? I would just strike that off as a metric to look at. That's how easy it is to fake.
Fair enough, man. Yeah, appreciate you for sharing some of those concrete numbers there. And that's actually ironic. Well, not ironically, but it's actually a bull case for Ethereum, right? Where, because things are expensive, it means that people will not want to spend that money to do the fake stuff because it's too expensive. So very, very important to know that that's going on. Just be conscious of it and apply that into your framework of thinking. Look, let's keep it moving. We've got a bunch of headlines to talk into, and we've got 15 minutes left, so maybe 5 minutes on each. The first headline, of course, was, let me find it again because it's gone missing as we kind of went into the Doomer AI conversation. First headline is high inflation data sent markets lower as crypto market cap has been, just wiped out a ton of leverage. Going to share my screen here so people on video can see. Kind of spoken about this already. Basically, inflation basically just came in hot. I'm going to simplify this as much as possible. Inflation was higher than people thought it was. and therefore prices sold off. People got scared. Why are people getting scared or wanting to sell off their riskier assets if inflation is high? Well, if inflation goes high, it means that the Fed will be less willing or less likely to cut rates. Everything is tracking rates at the moment. The whole reason why we're speeding up, or at least part of the reason why we're speeding up in general, risk assets have gone so high or going high, is because they are expecting rate cuts. Inflation going higher means that you know those become less likely, because when cutting rates is going to be kind of inflationary anyway, and you want to keep inflation under control. So if it's going higher before rate cuts, you don't really want to send the rate cuts into an inflationary environment, because it's just going to send inflation even higher, and people don't like inflation. That is not popular either. So the administration is in a bit of a tricky situation here. Inflation really needs to get under control, but it's not playing ball at the moment. I'm just sharing the poly market, which we brought up yesterday as well, talking about what kind of rate cut we might see in September. The administration is doing its very, very best to put the idea out there that it should be either 25 basis points, but we spoke yesterday about how Bessent was kind of setting the bar a little bit higher. It should be 50. And after that commentary, the poly market moved up. But since the inflation numbers came out kind of hot, that's moved down 5%. Even the chance of 25 basis points decrease has moved down 5% as well. So it's still pretty high. The market's still very much expecting a 25 basis points cut in September, at kind of priced at 75%, but it's definitely moved lower because of this inflation data. So what my view here is, I don't know. I think it's challenging at the moment in an inflationary environment. Like, Powell will not be able to cut if inflation stays the way it is. If it keeps getting hotter, they will not be able to cut. And I feel like it's just got a little bit too consensus that the cuts are going to happen 100%. And this inflation data just has to play ball, and it's not at the moment. I don't think they can do 20. I don't even think they can do 25 in September if this is how hot things are going to be. That's not what people want to hear. People just want to hear that, yeah, you'll cut rates and then all of our assets go up. But that's, they're juggling a bunch of things here. And it's not all about sending your ETH bags higher necessarily. So that's my kind of assessment there. Definitely something to be on your radar, because if you're just walking through thinking that the cuts are programmed, you've got to keep an eye on inflation, because that is what they will be watching to determine this stuff as well, along with some other stuff like employment and those things too. Brett, I'm going to stop there just for your quick view here. I tried to simplify this stuff. I'm not a macro expert when it comes to assessing all of the details. It's, in essence, inflation up means bad for potential rate cuts, because that is inflationary. What's your take?
I don't care. Number go up.
Even
it's beyond me. Like I know, like I'm not gonna be able to look at a singular chart and like just pivot my entire worldview on what's happening. Like there are far too many other catalysts going on that I just, if it happens, like it'll be one of several data points, and I'll let them the actual like experts in macro ingest that data and then give me their feedback on it. I don't have enough information on it to formulate my own like strong opinion or pivot my own position. I just like there's too much going on for our industry, and right now I don't really give a shit. Like, if it does change the course of things, it'll take place over a few months, and I will slowly adjust over that time. Hopefully I can sell my NFTs before things get too wild.
Well, there you go. That's why it's relevant to you. High inflation equals sell NFTs. That's the
everything means sell NFTs to me right now. I have things from 2021 that do not belong in my possession. I need to get rid of these fucking things. So like I'm using this current ETH catalyst to see if I can like salvage some shit. Like there's no point in me having this stuff.
Do the job. So, you got to press the buttons. Funky, your hand is raised. What's your take on this kind of macro situation?
First, Brett, just dump those things into bids and move on, right? I mean, that's what TradFi does. Sell your losers to your winners.
Bro, I
right?
got to figure out where they're at. Like I have them across wallets and shit. And I think I was trying to be smart and I like threw some in vaults and shit because like they were valuable, rare ones, which they probably are still a little bit, but like I have to value them again. Ugh.
Well, I was just say real quick, I think it doesn't really matter whether rates got cut or not. Look at how far we've come. To Brett's point, right? It doesn't really have that much of an effect. I mean, in the back in 23 into 24, the dollar was continuing to climb in strength and Bitcoin still rallied against that, right? Like it went from 30K to basically 70K. And while the dollar was getting stronger, now we're in an environment where the dollar is getting weaker. We already have tons of global liquidity increasing because of the other financial chicanery that's constantly being done by the Fed and the Treasury, even if they're not cutting rates. Right? Like cutting rates is, I think, to an extent, maybe priced in, and people just want to look at it and, oh, wait, we're going to get a half. It doesn't really matter. I think at the end of the day, would it help? Sure. But is it mean the market's not going to continue to climb higher without those rate cuts? Doubtful.
Sure. I think I think both of you are coming to the correct conclusion, which is kind of the conclusion for the whole industry all the time, which is the main assets here are going higher on a long enough time frame, and that's why it's good to specify the time frames here. I think we could see being for like a volatile time, August, September, but yes, beyond that, I think you're okay. I think that's fair to say. Okay, that's our view there. Let's do the next two headlines in the last 10 minutes. This one's very short because it was just a reminder that US Treasury Secretary Scott Bessent said the US will seize Bitcoin, but will not buy. That came out in like an interview earlier in the day yesterday. And then he came out and shared this tweet just to get the kind of official written perspective, which is Bitcoin that has been finally forfeited to the federal government will be the foundation of the strategic Bitcoin reserve that President Trump established in his March executive order. But he did go further then. In addition, Treasury is committed to exploring budget-neutral pathways to acquire more Bitcoin to expand the reserve and to execute on the president's promise to make the United States the Bitcoin superpower of the world. Pretty strong words. However, I guess no material action to take there as such, nothing concrete. We've known that they are exploring these budget neutral ways. I don't know what those will be necessarily. So we wait and see there. Just bringing that to your attention, it's pretty significant that the Treasury Secretary is kind of tweeting and speaking about Bitcoin so routinely. So thought that was worth mentioning. And then finally, we have the final headline, which Brad is going to take us through, where Hyperliquid is the only coin out of all of the top 20 something, which is up today. It's just crushing the various metrics. So, Brad, what do we need to know here on Hype? What is going on?
Yeah, the actual headline itself is that it reached all-time highs with $29 billion in 24-hour volume after we just spent a little bit of time chastising like volume as a metric. Like I think all-time highs here are significant, and that it generated $7.7 million in 24-hour fees, which, as you guys know, 97% of that goes back to Hype buybacks. So it just continues this arc of Hyperliquid being this liquidity hub of basically all of crypto, at least on-chain crypto, and it continuing to just be a good straight-up utility token, right? Now, if you look at the 24-hour fees, or actually, this is interesting because it's on the 24 hours, it's fifth in fees. On the 7-day, it's fifth in fees. And on the 30-day, it's fifth in fees across all protocols across all of crypto. So you're flipping the likes of PancakeSwap, Meteora, Athena, Lido, a lot of really big names. A couple of notable ones on top, at least on the 30-day. Uniswap is actually generating a shit ton of revenue. I guess that's partly because of Ethereum's rise in dominance again. I'm sure activity is picking up on the chain. And then Moon Overlord had an interesting comment on it, so I thought we'd just highlight that, where he's saying that Hype is weird in a pretty cruel way, where if you sell it for collateral and get liquidated, the team takes your money and buys your coins back with with your liquidation. And then he says a little meme on top of that. And I am happy to say that I have participated in that aspect of Hyperliquid. I didn't use it as collateral, but if I had sold it to get my USDC, then that was taken from me and used to buy hype for other people. So congratulations, everyone else, you have my money. But like, I know we're getting back into like ETH is amazing and it has store of value premium and it has like all these fluffy things that everyone wants to believe, give it this reason to be worth tens of billions of dollars or hundreds of billions of dollars. I think we're going to come back to looking at stuff like this, which is just having tokens that are actually useful and you have a very material revenue and fees generated and pushed right back to the token, and they're equity like in that way. And yeah, I like these kinds of coins, and I will continue to like these kinds of coins. And I still think it's undervalued in this market whenever you see what is actually being generated and how it's going back to it, because it's basically an application and not a chain. And it's a very successful one at that.
Yeah, appreciate the summary and the numbers and the insight. One thing that I'm thinking about for Hyperliquid, usually when I take positions in anything, historically, anytime I take a position in anything that is not Bitcoin or ETH, or actually some NFTs that I like, they're actually like really long-term positions, which I don't think about too much. I broke the ETH connection a little bit earlier this year because of Hyperliquid, really. Like, sure, ETH was performing poorly, but I felt that there was something more interesting and unique about Hyperliquid that was like, okay, let me take at least a proportion of this and go straight into this newer thing because I really like it. I was joking the other day, like, because of ETH's like crazy outperformance, it's probably getting to the point where the kind of the trade as such wouldn't have even mattered. Like, if I held ETH because I had so much, it would have been up a lot. And I made a good move on Hyperliquid at the time because that moved a lot as well. But I'm just finding it very difficult to think of reasons to sell this thing, as in, and I'm talking about Hyperliquid here now, because of the revenue that it's doing, the money that's making, the buyback mechanism. Also, if you think about it, Brad, where we're going, even on the way down, this thing is going to absolutely print. Like, say you were trying to think through the various scenarios for the next 3 to 6 months, which is what we do a lot of, and say there is a portion of you which is starting to think, okay, well, some of this treasury company stuff is a bit bearish. Well, okay, if you're bullish, Hyperliquid is going to keep printing, right? That is the trajectory. So just dealing with that scenario first and foremost, like, that is the trajectory. Even if you were bearish, I feel like it's a great token to have, or the one that you're comfortable with, at least in the beginning part, because it's going to be printing during that time. Having said that, I do not think, just fully thinking out this kind of risk management thing I'm doing in my head right now, I do not think any token in a bad environment will not be sold off. So people will still want to sell. Sure, it will sell off less bad than other things. But there's a hell of a lot of people who hold a hell of a lot of hype. And so those people will sell it off in a bad environment. So I'm not saying that it's going to like go to the moon whilst the rest of the market crashes. But I definitely feel comfortable I just feel very comfortable holding it. Like, I know you're holding a bunch as well, Brad. Like, does that assessment make sense to you, or what do you think?
Yeah. So I pivoted a large portion of my Ethereum bag from ETH to Hype, whatever, 3 months ago, 4 months ago, whenever that was, whenever we were having that conversation. It's done well for me since then. And then I had stables that were sitting on the side whenever ETH was doing this thing, and I bought back a good portion of Ethereum. So like now I have a pretty balanced portfolio between the two. I think the size of what's going on with Ethereum, like just like it's TradFi, like the scale is just completely different, right? You have other companies that are just one of many. Like an example from yesterday was we were talking about Caterpillar, right? It's one of several machine manufacturers, and it's worth $150 billion, right? Like it's just like one of the like anything in the world, and the scale is just massive. So like when we start talking about the numbers that they're talking about, like that stuff's going to keep going. I'm going to ride it for a little bit. As you were saying with Hyperliquid, it's a more of a pure play because it is. it doesn't make any there is no fancy moneyness aspect of it. Although like that is there, everyone's just like, bro, look at the fees. Yeah, Publius in the chat. It's like, I just like the fees. Exactly. Like they see the fees and they go, oh my god, this thing makes a bunch of money. I'm just gonna keep riding this thing because that infinite buy pressure. And like you said,
Do
whether
you know
it's
what?
going up
It's
or
so
down,
rare though, Brett. That's why people are just like, oh my god, fees. Like, think of how long it's been, or how long crypto has existed. And I haven't even been in from the beginning, right? Came in 2021. There are like 2 tokens now right towards the top of like incredibly successful applications that people actually use all the time. It's actually printing money all the time. And sure, there were DEXs before. DEXs always made money. But DEXs also had terrible tokenomics, which would kind of wreck you. So, yeah.
yes. So the thing that I was leading this to is that yes, it is. It's great. It's unique. It's like different in this world. That means like you can actually start just doing a bunch of different like traditional like calculations against it to build confidence in the thing. Because like most of like TradFi metrics don't make any fucking sense in our space because of all the ways that we try to calculate like is it what this thing is worth, right? So yes, this thing is generating a shit ton of fees. Yes, that is an anomaly within our industry. But yes, Hyperliquid as a token right now is actually pretty expensive relative to that, like to the fees that they're generating. And it's because it's such an anomaly, people are really bullish on it, right? And they're obviously pricing in a bunch of future growth. Like if you take yesterday's all-time high, or whenever that was, all-time high in fees, and you extrapolate that over to a full year, you're getting roughly $2.7 billion, right? If you look at the actual market cap of it right now, it's 16 billion. If you look at fully diluted, 48 billion, right? So if you're looking at like what would be price to earnings traditionally, right? And this is forward guidance on the all-time high in fees that they've already had. They're already, what is that? Like on an 8x multiple on market cap. And if you do fully diluted, then you're looking at, what is that, 24 as the multiple. Like that's pretty high for PE ratio, right? And like you're pricing in a lot of growth, but then you see some shit in TradFi that are just blowing up. You're seeing multiple hundreds of PE ratios, like on things that are exceptionally bullish. I don't know what like Nvidia is these days. I need to go look, but so like you're starting to enter into this realm of like, okay, we can just actually like calculate this thing as we do most other things. And I will reiterate that most of this stuff is bullshit, like funny money stuff. These are all just metrics that people have come up in with. And because people have referenced them enough, they've built up enough of like a cult around them. PE ratio doesn't make any, like, there's no reason any company should have a certain PE ratio. It's all magic numbers that everyone is just like, again, someone came up with it and then enough people used it that they're like, yeah, okay, this is like a good ratio. And like most things are in this range and like it's a whatever, but there's no reason a company has to be priced at that. And things, you know, shouldn't expend beyond a certain band of what that thing is.
I think interestingly on the kind of these ratios, I wonder whether in the same way that there's inflation in all kinds of other aspects of life, I guess there can be inflation on ratios. On some level, that doesn't make any sense, right? Because a ratio is a ratio. And so like it should already be
acceptable ratios.
Inflation of the market caps themselves. Yeah. But maybe as part of the process, you just kind of inflate the ratio as well as people. I don't know.
Well, I mean, that's kind of what's been happening, but I think it's less about like inflation and more about the accessibility of the people that are buying these things, right? Like no one in crypto is doing a PE ratio on hype, right? They just go, oh my God, look at the fees, buy the coin. Yeah. That's it, which is exactly what was happening with TradFi as like the Wall Street Bets crowd, like the democratization of access to these capital markets like actually happened, right? Tesla was going through the fucking roof and everyone who was a traditional investor was going, you guys are retarded. This thing's PE ratio is at 900 gajillion. It's breaking all of our models. It doesn't make any sense. It's going to collapse. And all those people tried to short it and all those people got liquidated because unsophisticated, or not, I wouldn't say unsophisticated, but investors that did not adhere to the same like rules and guardrails of the previous traditional investors who like looked at PE ratios, entered the market and fucked them up, right? Because they weren't paying attention to the same metrics. And we're going to probably have the same stuff here where like all of these people are not looking at the same shit. Like we don't know what everyone's looking at. They're just seeing fees as a number going, sick, buy the coin. It's more than everyone else, buy the coin. And they're not doing any kind of like ratio stuff. like they're trying to do some forward guidance stuff. Like, bros, just imagine what happens whenever it takes over the rest of sex perp trading, right? And then guess what happens whenever it starts taking over equity trading and the entire world is trading on Hyperliquid. They're doing this bull case stuff that we always do, but there's no like hard metric that everyone's looking at that like they have adhered to. Like it's too nascent of an industry. So
yeah, well, the token is doing very well. It's a interesting conversation. Definitely wanted to bring those numbers to your attention, share some of our thoughts around it. Does feel pretty good here, especially because
I'm holding it.
Yeah, it especially feels good here, I think, because as other things, specifically ETH, has like moved up a lot. Hype's been kind of in this range now for quite a long time. It's kind of got comfortable in the 40 to, I don't know, 38 to 48 ish range. I know there's kind of a wide range, but it feels like if, you know, Bitcoin is going to stay strong and other things are going to kind of play ball, it feels kind of comfy. Although something that I've been, because I've always had one eye on DCAing out over the next year or something like that, not trying to time tops. I might sell like a touch of hype towards $50 because I have a lot and might do like 5%, a few percent. As in, so when I say like a bit, that's kind of how I'm doing things at the moment. It's like 2%, 5%, something like that.
Have you seen Deez's posts on it?
Yeah, I've seen him do something
Sacrifices.
similar. Yeah, just like take a bit of the edge off.
Yep.
You know, just feel a bit looser about things. It's surprising how, like, even if it's a small amount, how you just feel better.
The act of doing it. Yeah.
Yeah, the act of doing it just actually just loosens you up a bit. So, I think I might do that. I'm going to think about it, but as I said, I thought it was important to discuss that one. Still liking it a lot here specifically because of the way we see things trending at the moment. But guys, ran a little bit over. That was a great show. Enjoyed it very much. Thank you so much for joining. Thanks to Bread, my co-host, and my co-speakers who were up at the beginning. Funky and Oxy and Mindless jumping in as well. Good to have you with us as always. Just a reminder, we do this every single day, Monday to Friday, 7 a.m. Eastern time for 1 hour. We're live on X Video, YouTube, and you can catch us on Apple and Spotify podcasts too. That is the weekend. We will not be here tomorrow. We will be back on Monday. Hope you have a wonderful day today and a wonderful Saturday and Sunday. Take care. We will see you back on Monday. Bye-bye.